Hello and welcome. You tune into Market Fatafat with me, Ankita Saxena, and with me is Kanishka Sarkar. In the next half an hour, we'll take you through all the top buzzers in the trading session and why they're buzzing on the back of news flow or on the back of technicals. But first up, let's take stock of how the market is shaping up at this juncture. Well, we are doing pretty good right now because, in the morning we had a very muted start. We have picked up quite a bit from, we are up almost 140 points from the day's lows on Nifty. We are at 25,978 as of now. In fact, we are very close to touching the 26,000 mark, up almost 100 points. Nifty Bank has posted a stronger recovery. We are up almost 400 points from the day's lowest point. We are at the day's high right now. We are trading with gains of 310 odd points, so 0.5% gain coming in on Nifty Bank. Broader end of the markets, that has been underperforming, but there is a recovery there as well. Mid cap is trading up 0.2%, and small caps also has turned absolutely flat. In fact, the smaller cap is seeing a bigger drawdown. It's very, very flat as we speak right now. But let's get on board. Ashish Kayal, founder and CEO of Wave Strategy Advisors, who's joining us on the technicals for the day, and let's get started with the show. First stock for the day is Honasa, that's in focus on the back of its Q2 numbers. Now, as far as the scorecard is concerned, the revenue is in line. PAT, EBITDA and margin has beaten what ET now was expecting. Let's take a look at the numbers then. The revenue has seen an uptick of 16.5%, coming at 538 crores versus 462 crores on a year-on-year basis. The net profit, it has come in at 39 crores. Now remember, on a year-on-year basis, we had seen a loss in that quarter of 18 crores. So there is a profit versus a loss last year. EBITDA is seeing an uptick of at 48 crores versus an EBITDA loss of 31 crores, and EBITDA margin also stands at 8.8%. So good set of numbers coming in for Honasa this time. And on the back of that, we do see the stock up in a way 4.5%. According to brokerages, Jefferies is maintaining an overweight. They've hiked the target price to 450. CLSA is maintaining an accumulate, and they've also hiked the target price to 350. Goldman Sachs maintains a neutral and hiked the target price to 315. So a brokerage upgrade and good set of results coming in for Honasa consumers is buoying the sentiment for the counter that's trading up 4.5%.
All right, so that's Honasa consumer for you. But Ashish, let me come to you. You've picked up Vedanta for us. Tell us, what are you, what are the charts suggesting for this stock? It has given a return of just about 11% in the month gone by. Do you think further upside is what we can expect from Vedanta, given very strong set of numbers coming in from some of the metal companies, just like we saw from Tata Steel?
Hi, afternoon to you and all the viewers. If you look at Vedanta, the stock has managed to do well over the past many weeks, and I think the uptrend in Vedanta should continue even from here on. The stock is currently having an upside potential which can take prices towards the level of around 545, 546 levels over short term. On the downside, one can maintain a stop loss for the stock at around 522.
So that's about Vedanta. Those are the levels to track. But let's move on and put the spotlight on Asian Paints, which is the top Nifty gainer today. It has reported a very strong set of Q2 numbers, both revenue, profit and margin, all of them beat as against the expectations of the street. Revenue has risen more than 6.5%. Well, net profit, that has seen a jump of 47% actually, and that's supported by a healthy 10.9% volume growth in the decorative segment. And there's also been a sharp margin expansion to that 17.5% level. However, brokerages remain divided. Morgan Stanley has maintained an underweight call with the target price of 2,194 crore rupees. That's flagging limited valuation upside. Goldman Sachs and Citi, on the other hand, they have maintained their sell rating, citing moderation in growth once the festive boost phase. Elara, on the other hand, has raised the target price to 2,600 rupees, though it stays bearish, warning of widening value-volume gap. On the other hand, we also had a conversation with the management that has struck a confident note on profitability, saying that raw material prices remain benign and margins are expected to stay healthy in the 18 to 20% range.
As of now, we don't see any pressure with respect to any pricing because the raw material prices have been benign. In fact, we have seen a deflation of about 1.6% in this quarter overall. And going forward also, we are not seeing any much pressure with respect to the overall raw material prices to that extent. There are definitely pressures in the market from a point of view of competitive pressures in terms of what we see. The portfolio is largely led by the protective coatings, and we see some pressure from the point of view of powder coatings, which have been there to that extent. But going forward, I think we should be able to retain the current margins in terms of what we have delivered in the industrial business.
All right, moving on from Asian Paints, that was the management. Asian Paints, another counter that's doing well in the trading session. Ashish, coming to you for Indigo. Indigo is also a name that's doing very well in today's trading session. In fact, Indigo, in the last 3-4 days has been performing well. Tell us on the charts, what are the levels to watch out for?
See, if you look at Indigo, it has slowly and steadily continued to outperform and has been closing around the weekly highs, as well as the daily chart looks very promising. The stock has managed to form a very good bottom around 5,600, showed a sharp reversal up from there, and we can expect it to go towards the prior swing high, which is around 6,220. So long positions can be created on any dips. Maintain a stop loss of around 5,780 for the target of 6,220.
All right, let's move on to the next counter that is doing exceptionally well. In fact, that's soaring away almost 7% in the trading session. It's a jump up of 10%. It has cooled off from there, but Nazara Tech is up in a way 7% on the back of its quarter two results. Let's take a look at the results. Even though they have posted a loss of 29 crores versus a profit of 23 crores on a year-on-year basis, the revenue has come in at 526 crores, which is a jump of 65% on a year-on-year basis. And the management says that they have refreshed their brand identity and included new logos. They also see that they're committed towards delivering magical interactive game experiences to a global player base. And on the back of that, Nazara Tech is up in a way 7% in the trading session.
All right. That is Nazara Tech for you, up more than 7% right now. But moving on to the next counter, Ashish, you've picked out ICICI Bank for us. Tell us, what do charts suggest for this counter?
See, overall banking space, I think, is going to outperform, and Bank Nifty is also showing strong recovery signs. ICICI Bank has been a very strong, outperformer about few weeks back, but over last few days, we can see some kind of a correction on downside around 1320. Managed to reverse back, so I think there is a lot of catch up for ICICI Bank to do along with Bank Nifty. So on the upside, ICICI Bank can reach towards the level of 1440, 1450 levels, and on the downside, one can maintain a stop loss of around 1350.
All right, Ashish, on that note, thank you so much for taking the time out and joining us in today's Fatafat. We will let you go on that note, but with that, it's also time for us to slip into a short break.
Welcome back. You've joined us on ET Now, and let's now put the spotlight on Tata Steel. This counter reported very strong set of numbers for the quarter gone by, but remember, the stock has given up most of its morning gains after management came up with some muted commentary for the second half of the year in their con call. In fact, the management also said that there is no visibility with respect to UK turning profitable going forward. And to discuss this in greater detail, we now have Mr. Trivi Narendran, CEO and MD at Tata Steel, now joining us. Mr. Narendran, afternoon, and thank you so much for joining us today. And since Europe is a pain point for you, let's get started and let's talk about that first. It reported steady performance in the quarter gone by with EBITDA per ton at $8 per ton. Do you expect Europe profitability to improve in the second half of the year, and what will your guidance be for both Netherlands as well as for UK operations?
So in Europe, I'd like to split it into two parts. One is Netherlands and the other is UK. So Netherlands has shown a consistent improvement over the last few quarters because the volumes are now reached the peak levels. We have recovered from the challenges of the blast furnace relining that we had last year. And, so hence the margins and the EBITDAs have been trending towards long-term average. We do expect Q3 to be a bit of a challenge simply because the prices are still a bit soft, but we expect Q4 to be much better in Europe because Europe has already announced a reduction in import quotas as far as steel is concerned. So Netherlands will be positive for the second half, better in second half than in first half. UK also will be slightly better in second half compared to the first half, but it will still be in the red because the UK market conditions are much worse. Quota actions have not been taken by the UK government like it has been done by the EU. We are talking to them to try and see what support we can get there. But the market continues to be challenging. Demand is not great in the UK. Margins are under pressure. So we expect the losses to keep reducing in UK, but we will not come back to the black very quickly unless there is some action from the government side.
Okay, so UK will continue to report losses in the second half of the year, but for Europe, you're saying that the third half will continue to remain challenging, but the fourth quarter will be positive. Last time, you did tell us that UK might take some more quarters to turn profitable. How soon do you expect to turn profitable as far as UK operations? If you can set a timeline for us.
So I think the actions that we had to take internally have been taken. We have taken out almost 350 million pounds of fixed costs over the last 3-4 quarters. So that's why UK today is at half the losses that it was last year Q2. Okay, this is despite the prices being much worse. Okay, so the actions we have taken have made sure that the losses are limited. But to go to positive, we need some actions from the UK government or an improvement in the overall market. So we are waiting for that. So it depends a little bit on factors which are beyond our control. But the point is, other geographies have taken actions to protect themselves against the flood of imports. Europe has taken that action. US has taken that action. India has taken some actions. So we are asking the UK government to also take some of those actions.
We completely get that point. And Mr. Narendran, since we are talking about influx of imports, what is the situation back home in India? And is the 12% safeguard duty working in favor of Indian steel mills? And how are import prices faring as compared to domestic prices?
So yes, things have improved, or at least the imports have been limited by the safeguard duty announcement. Imports are coming in, but obviously could have been much worse. What is of concern for us is international markets are not available for us if we need to export, because China is still selling 10 million tons of steel a month at prices at which they don't make money. So as a consequence, the pricing in the international markets is not great. We have been saved by the fact that the demand has been strong in India, so we are able to sell the additional volumes. We, as in not just Tata Steel, but my peers in the industry have also been able to sell the additional volumes in the Indian market. So that's why the prices in India are still a bit depressed compared to international prices. That's because supplies are growing in India. While demand is growing, there is enough supply in the market. I think the threat of imports is still a concern, and hence we continue to look for government interventions wherever required, because like I said, these are priced at price points where the suppliers are not making money. It's not that they're more competitive than us. The other point I want to make is all the steel companies have announced expansion plans, capex of at least 10 to 15,000 crores a year from each of us. And that is always under pressure if there are not enough cash flows or margins to support those ambitions.
All right, so cheaper exports from China continues to remain a problem, especially at a time when Chinese steel mills are not making profit. But let's also talk about India operations then. And Mr. Narendran, that continues to report solid profit, 20% YOY growth as far as volumes are concerned in the second quarter. What will your volume growth guidance be, particularly for India operations for the second half of the year? And will the volume growth momentum sustain going forward as well?
So third quarter, our India volumes will be 500,000 more than second quarter, because the Kalinganagar ramp up continues. And, and not only that, we are also improving the product mix, because our cold rolling mill has got commissioned, the galvanizing lines have got commissioned. So we expect to deliver better volumes and a better mix.
Okay, better volumes and better mix, that's the word coming in with respect to volume growth. And because of Kalinganagar expansion, volumes are expected to inch higher. But we have to talk about net debt then. And last time when we interacted with you, you did tell us that net debt at the end of FY26 will be lower than what it was at the end of last year. This quarter, it has risen on a sequential basis by about 3%. Do you still maintain your stance despite the increase in net debt?
Well, we are still chasing that. We have been set back by the losses in UK more than the plan. So that is obviously, in some sense, eaten up some of the cash that we had hoped to generate. But yes, we are still chasing that. But if you look at our net debt to EBITDA, it is well on track. It's well below 3. It had gone to 3.3 last year. It's below 3 and trending towards 2.5.
All right, so despite the increase in net debt, you continue to chase that target that FY26 net debt could actually be lower than last year. And since you spoke about a government intervention to curb Chinese imports into India, if you can take us through what your ask is from the government. Is it to increase safeguard duty beyond the 12% mark, or are you expecting support from the government in any other form?
So I think the original ask of the industry was 25%. The government agreed to 12%, and we said, okay, we'll, live with that for some time, and that's what we've done. Our only point is, please keep an eye on it, because again, like I said, it's not that we are losing money. That's obvious from the numbers. But the question is, if the prices are under pressure, does that allow us the appetite to invest in significant capacity addition going forward? Because obviously the cash flows then have to be much stronger than it is today if we have to make those kind of investments.
Okay, so that's as far as the outlook going forward is concerned, and perhaps we need some kind of government support to support domestic steel mills. Mr. Narendran, thank you so much for taking your time out and joining us here on ET Now and helping us understand what the outlook is both for Netherlands as well as for UK operations going forward. Tata Steel, as I mentioned, after the commentary that came in from the management in the con call dipped a little bit, but then it has recovered and now absolutely flat as we speak. But let's put the spotlight on the market then, and Nifty has now crossed that 26,000 mark for the first time since October 29, and we've seen moves come in yesterday as well. Today it is gaining for the second consecutive day. It has cooled off a tad bit after touching that 26,000 mark, but clearly turning out to be a good day. In terms of individual stocks, paint sector continues to lead charge. So Asian Paints, that one was up 5% yesterday, continues to inch higher in trade today, up 4% We have Hindalco, ICICI Bank and L&T, all of them gaining in excess of 1.5%.